Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in insane markets. It's Saturday, 8:42 in the morning, November 16th, 2024. And I've been wondering what I'm going to put out today for a video for you guys. And basically more like thinking what can I give you that gives you proprietary information that can help you actually find trades that are about to occur. And one of the techniques that I discovered a long time ago was a measured move. And the basis of a measured move is that markets generally stay within a trading range 80% of the time. The other, or 75 to 80%, so the other 20 to 25% of the time they trend. So they don't really trend really often. They basically stay either in a big range or a tight range. And, when you're in the forest, you got to be able to see all the trees and not, see the forest for the trees. Is that how the saying goes? But there are several market principles or market laws that overall do work. And in other words, one of the market laws basically said that anytime, a commodity or a currency or a stock goes to an extremely low level and stays there for a period of time where it's in a really tight trading range, you could apply a measured move for the breakout to see if the breakout is actually a true breakout and there's a trend change. A lot of times people trade breakouts only to find that they fail and they incur, losses from doing it. And I can understand that. I mean, if you're just taking the breakout, you should apply some principles to the breakout. Basically, what I go over in the 3 Steps book that you get for free from my website, which I suggest you pick up. It's basically some ideas on whether or not you should take whether or not the breakout will actually fail or not, based off of the previous bar's movement. So for example, if you're up at the top of a rectangle and all of a sudden a breakout occurs, breaking out up top, you want to look at the bar before. If the bar before was a down close, you got more of a chance for the breakout to actually move into profits. Now, it doesn't mean it's going to stay in profits, because there could be sellers that come in and whack it right back down. So the measured move calculation will be better for you and easier for you to kind of understand where the next trade about to happen could occur. Okay, nothing is ever written, in stone in trading, obviously. But the idea of having the measured move, you could basically figure out where the level of resistance should hold or whether a level of support should hold. And the measured move that I'm going to give you today was based off of a lot of analysis short term. Now, there's measured moves for medium term and there are measured moves for long term, but for this video we're going to cover the short term measured move. And what I found was that if I was looking at a bell curve, right, and I'm looking at standard deviations, and Bollinger Bands use standard deviations, right? So the idea was, okay, so instead of me waiting for the band itself to signal, okay, which would most likely could be too late, I needed something that would give me an idea of what a marketplace wanted to do. And I found that 125, 120, 130 pips basically gave me an idea of where a potential trade would be that could happen. Okay, so I'm looking at on this chart, we're looking at Canada yen. It's one I don't really cover it. So I just said, let me pick a chart that I don't really have any, real recent memory of, and try to force this idea and create a bias. All right, that's one thing I'm always trying to, when I'm giving out ideas for forex trading, I don't really want a bias. And I have to say, like, Friday, I was completely wrong in dollar yen. I thought dollar yen was still bullish. I expected the crosses to go down. If you look at Friday's video, which is the 15th, because you could be looking at this years later, which I hope you are. That's the whole idea of doing this, that I built like a legacy. Somebody comes in and says, hey, let's see what this guy's got to say. But I really thought dollar yen was going to hold like the one. You go back and watch the video, but I thought dollar yen was going to stay bullish, and the continentals were going to come off, and the crosses were basically going to go down through, sterling and euro going down. They stood in a range, and dollar yen just got hammered. So the cross directions were right, but wrong. The components were wrong. But that's a totally different subject. Anyway, so let's work with this measured move idea. All right. So if I'm looking at this marketplace right here, I'm going to just go. This is a 1 hour chart. I'm going to say, okay, look, we got kind of a double bottom right here. All right. So marketplace moves up, and we create a higher low right there. Now we have a top right here, right? So is this marketplace basically going to break this top? This is what everybody's looking for, when they're trading this thing. Like, hey, we have a higher low right here. We got the high right here. Is the next move, without the benefit of hindsight right here, is the next move going to take this top out? Are we going to continue higher? Or is this resistance level up here going to hold? So we could take a measured move off of this. So hang on one second. Let's get ready. I said it's about 120, 125 pips, 130 pips. I'm going to use something in the middle of 123 pips. So hang on. Let me just get my calculation ready. Okay, so working with this, what we're doing with the measured move is this. Now you could do it also from a top, and we will do that as well. So we have this congestion here, right? And we got the double low right there. So if I take this low of 109, I mean, you could even take this one. It doesn't, it doesn't matter. They're very, very close. 109.38, 109.32. It's basically the same price. And the marketplace had this explosive move up to 110.70, which is not a bad move for a day. Okay, so if you caught that on a day, that's great. Good amount of pips that day. So if I take this low right here, say 109.38, and I add 123 points to that, I get 109.61. That's a level of resistance from this low. Now look, we exceeded it a little bit here, but this is giving you a good indication that this top should hold. Now you say, okay, great. Well, how do I handle that? Well, it's simple, well, not simple, but, a trading idea would be that this marketplace comes up right here. Okay, we have a high. The next bar actually exceeds this low right here, showing weakness, and the marketplace starts to trade down from that high. So you're basically in a decent position, and you can say, well, okay, I take that. Let's say, for instance, I just short the 110.61. Where would my stop be? But that's where the other section of the measured move comes in. You have this higher low right here of 109.67. And you get 110.90. Okay, so when I add 123 points to it, I get 110.90. Right there. So what I've created based off of this price is I created a sell zone and a stop loss all at once. Okay, so right here it's telling me that the marketplace, really this area right here, this is kind of like what you see all the other YouTubers do, you know, after they go, oh, okay, here's the top, you know, but this is actually forecasting. Okay, so you're going one step further. Instead of using previous resistance, and then, you know, I don't even know how they do it. I mean, they just basically, you know, come up with something. But this is basically how I do it. I get myself a sell zone area. Now, you say, okay, great. I got in this trade. All right. How do I know, like, where to get out? Or what can I use as an indicator to tell me I should stay short? Okay. So we know that we have this bottom right there. That would be considered support, right? So getting through that bottom would actually show markets turning down. But let's get an indication before that goes. Okay, so if I take the high of this market, right, 110.68, 1.23 out, I'm just, you know, I get 109.45, which is basically this low, right? But hang on right here, 109. 109.45, which actually is this low. So if this marketplace breaks this, it's going to take this low out and continue lower. Okay, so let's just see what happens. I don't even know what happens. So, okay, we took the low out. We had the slight retrace back up. Again, we would use this using 123 up, basically saying that that should be our resistance point. And it actually hung around here pretty well. I mean, went down to 108.94. Not great, but for a day trade. And this is, remember, this is the point, like right here. This level was the point that it needed to stay below in order for it to show weakness. It didn't really do it. I mean, it came down, but okay. I mean, you could say, yeah, it did. But this point right here, calculated off the top, was saying that this should have been the demarcation line for lower. So just having this level here is basically showing you, okay, look, now we're up in the sell zone area again, but now I'd be using this low in order to calculate the next level it needs to get up above to show resistance. And then I could use this low to throw it on top for the envelope itself and basically say, if it breaks that envelope, the marketplace is continuing higher. It's continuing stronger. So it's just a small indication for you to use. And I suggest you go back to your charts and use it. It's a short-term measured move indicator. Okay, it's a great way to figure out like what the market is trying to tell you. When we had the level here, we were saying, oh, we should break lower. Now, I could find instances where it really breaks and it uses it as resistance, and it continues down even deeper. But the idea was not to basically show you all winning trades. You know, the idea is to show you the principle that you can go back and try on your own. Okay, so I hope that adds to your little trading toolkit. Remember, it's 120, 130. I used 123 pips just as an indication. So please, if you like what you see, leave a comment. Share my videos far and wide. I want to build a big trading community. Head over to Park Avenue Trading and get yourself a free ebook. And remember, always enjoy the party, but dance near the door. Cheers.